Hello everyone, welcome to another video with DK. So today we are going to be looking at the consolidation activity containing the CRJ, the DJ and the DAJ. So they are going to mix a number of transactions, and then you have to place each transaction into the journal that it belongs to. Okay, because as a business, you get into different types of transactions, or you are involved with different types of transactions with the customers or with the suppliers. Okay, so let us get right into it. So the information Keratile Nkosi owns, so we know that Keratile Nkosi is the owner, because the information is telling us that this person is the owner. Owns a KN Traders. This is the name of the business. I'll write it there. That sells, or that buys and sells household appliances. So this is what they do. He sells his merchandise. You know that merchandise is actually your trading stock, the trading stock of this business, for cash transactions, and on credit transactions at a profit markup of 25%. Okay, so we know that we can use this profit markup to calculate either the cost price amount or the selling price amount. Okay, so if you are looking for the cost price amount, is going to be your SP amount multiplied by, because you are looking for cost price, whatever that you are looking for should always be at the top, divided by whatever that you know or you are given, which is 100 plus 125. Okay, to calculate the selling price amount, you know that you take your cost price, multiply it with what you are looking for. You are looking for the 125, which is your selling price, divided by what you are given. You are given the cost price, and the percentage for cost price is always 100%. Okay, let us move on to instructions. It says here, record the following transactions in the debtors, allowances, and cash receipts journals. Close off. So when they say close off, that means we want to see the totals of every account in those journals at the end of the month. Okay, it's written for us here. And then transactions for July 2025. So basically we are doing the journals for July 2025, or we are completing the journals using the transactions that took place in July 2025. Let us get right into it. Day 7, it says sold goods on credit. So we know that the goods are sold on credit. Already we know which journal this transaction will go into. Okay, to Tikonga for 1,525 issued invoice. Also check the invoice that was issued out. Okay, that will tell you which journal this transaction should be recorded in. Okay, so this is a credit sale transaction. We sold goods on credit and an invoice was issued out. So we know that Tikonga is a debtor. Okay, debtor. Yeah, so this transaction will go into the DJ. And then day 13, it says issued invoice number 2. We know we should issue an invoice, so it's a credit transaction to El Khasi for goods sold to her. 480 is the selling price of the goods. Sorry, for this one the selling price is 1,525. This is your selling price. And then let's move on or continue with number 2. Invoice number to El Khasi. El Khasi is our debtor. Okay, for goods sold to her. This is the selling price. So we also know that this will go into the DJ. It's a credit sale. Again, let me write it here. It's a credit sale. credit. Let's see. Okay, and then day 14, received. Keywords, guys, keywords, always underline your keywords. Received an EFT, so this person made an electronical payment to this business from El Khasi to fully means all, okay? Settle her account, what he owes. Okay, so a debtor is making a payment to the business for what he owes, or what she owes actually. Okay, so this one will be recorded under the CRJ because the business is receiving cash, so it's a cash receipt transaction. Okay, money is being received, cash is being received. If cash is being received, it will always be recorded under the CRJ. Okay, a cash receipt journal. Yeah. And then day 16, the owner increased his capital to, so he increased, the owner, who is the owner, Geratile Nkosi, increased his capital to 80,000. So it's 2. It did not say by 80,000. Okay, so we are not going to record the 80,000. We are not going to take the 80,000 and record it as it is. It says 2. That means it's from a certain amount to 80,000. Okay, so I think I skipped one piece of information that is very important, which is this one. It says he started his business with the capital of 20,000. So that means if he increased his capital to 80,000, how much did he actually contribute? Okay, so we know that the business received cash from the owner, and the business issued receipt, the document number, the document that was issued out, or the evidence that money was received, issued receipt number 2023. So we know this is a cash transaction. It's a cash receipt as well. The cash receipt, the business received cash from the owner. And then day 19, sold goods for cash, not on credit, to El Khasi. We know that El Khasi is a debtor, but this transaction is not going to go to the debtor's journal because the goods were sold for cash. Okay, 600 is the selling price according to the cash register roll. Also look at the type of source document that was used for this transaction. CRR is always under the CRJ. So we received money for goods bought cash by El Khasi. So this one will go into the CRJ. It's a cash receipt. I'll write cash R. I don't have space there. Day 25, El Khasi returned. Very important. El Khasi is a debtor, and this debtor returned damaged goods worth 300. Okay, so this is the selling price of the goods that were returned by this debtor. A credit note was issued. So every time a debtor returns goods, we issue out, or the business issues out, a credit note. Okay, as evidence that we have accepted the goods that were returned, and we can allow you or reduce your account by a certain amount. Okay, was issued by the business, so this will go under the DAJ, which is a journal that records, returns made by the debtors, or allowances made by the business to the debtors. Okay, so this is a return. I'll write it here. And then day 28, it says T Konka made an EFT of 1,200 in part payment of her account. Okay, so T Konka, we know that she is a debtor to the business. Why? Because on day 7 she bought goods on credit. Now on day 28 or on the 28th of July, Tikonka made an EFT of 1,200 to the business to pay a part of what she owes to the business. Okay, and then on the same day, we as the business received, or the business KN Traders received an EFT, okay, from K Powell for office space led to him for the month. Okay, office space led to him. Okay, we know that is rent. Okay, so immediately we know this is rent income for the month. The annual rental amounts to, so annual means 12 months. Okay, 1 year. So for 12 months amounts to 36,000. Okay, so this is not for 1 month, it's for the whole year, 12 months. Okay, and then on day 30, El Khasi purchased goods to the value of 1,800 on credit. Before I move on, let us name the journal, the journal that this transaction will be recorded in. So Tikonka made an EFT, so we received money from Tikonka, so it's CRJ received an EFT. Even this one to go under the CRJ, it's a cash receipt. Day 30, El Khasi purchased goods to the value of 1,800 on credit. Okay, it's a credit sale, it goes under the DAJ. Okay, now let us go straight into the recording part. Okay, let us record. So I'm going to record all the transactions that go into. Can I take this out? Okay, let me do this. Should I start with the CRJ? Let me start with the debtors journal. Let me start with this one and the debtors allowances journal. Okay, so let's start with this. So let's start with day 7. So on day 7, sold goods on credit. So it's going to be the document number. The document number there is 001. Day 7. The name of the debtor under details is T Konga. Okay, so we don't have the account number or the reference number of the debtor, so we leave it empty. Okay, so the selling price or the amount earned by the business from selling the goods on credit is 1,525. And then we have to calculate what the cost of sales, meaning the cost price of the goods sold. Okay, it's going to be, or we are going to take this now. We're going to take, remember the formula that we started with to calculate cost price. I'm going to take this one. So it's gonna be the selling price amount, which is 1,525 multiplied by 100 divided by 125. How much do we get? Let's calculate. 1,525 multiplied by 100 divided by 125. You get 1,220. 1,220. And then the next one, so I'm going to put a tick here because I'm done recording that transaction. The next one, it also goes to the DJ's day 13. Okay, day 13. It says issued invoice to El Khasi for goods sold to her 480. Okay, so we don't have an invoice. Oh, we do have. There's the invoice number is 00002. The debtor's name is El Khasi, and then the selling price of the goods or the money earned from selling the goods is 480. So we have to calculate the cost of sales or the cost of all the goods that were sold. So it's going to be 480 divided by 125. So the answer is 384. Okay, moving on. We are done with this one. So transaction on day 14 does not go into the DJ. Let's go to, so we are done with this one. So the last transaction, day 28, let's record that one. It does go to the DJ. So let me fix it like this so that you can see. So it's going to be 003 because we continue from the previous number. So if you are not given the document number, you continue with you continue from the previous number of the source document. Okay, because source documents are issued out in order. Okay, so we follow the same order throughout. Day 30, the name of the data is L Khasi, and then the selling price, or how much we sold the goods for, or how much we earned from selling the goods, is 1,800. So let's find the cost of sales of these goods. 125, so it's going to be 1,440. Okay, and then let's put the total. So it's going to be 1,525 plus 480 plus 1,800. You get 3,805. And then the cost of sales total, we add all of them up, and then how much do we get? We get 3,044. So we are done with the data's journal. So I'm going to tick the only 3 transactions that go into the data's journal, and let us continue with the data's allowances journal. Did this business have any returns during the month? Yes, they did. When they had returns on day 25. So let us go to day 25. There is day 25. El Khasi returned damaged goods worth 3,300. Credit note number 3 was issued. So the document number is number 3. Day 25. The name of the debtor who returned the goods is El Khasi. We don't have the folio number, the reference number of the debtor. So with the debtor's allowance, we want the account. We only record the selling price amount of the goods that we returned, and the side is the cost price of the goods that we returned. Okay, what is the selling price here? Is 300. So what is the cost of these goods? Same thing you did with the data's journal, you do it here. So we only had one transaction relating to returns, so the total would be the same as the transaction as recorded. Okay, we are done with both of these journals. So it's going to be, so we're done. I'm going to put a tick there. We're done. So I think the rest of the journals, the rest of the transactions will be entered under the CRJ. Let me put it here. I can't see it. It's back to back, so I think I'm going to use another paper that I have here. Okay, but no, let me not use it now. Okay, so let's check 14. So they must be in order. Ne? Let's check day 14. Received an EFT from El Khasi to fully settle her account. How much does El Khasi owe the business? Because in this transaction they did not give us the amount that she paid to the business, but we know by looking at the transactions before, we can see that El Khasi actually bought goods worth 480. So that means this is the amount that she owes by the 14th. Okay, so in order to fully settle her account, she has to pay this 180 to the business. Okay, because that's what she owed by the 14th. Okay, let's go record. So let's start with the document number. So it's an EFT. So the business has to check to verify that there was money deposited. They have to check the bank statement. Sorry about that, the bank statement. So it's going to be day 14. The details, it's El Khasi, the name of the debtor. We don't have the folio number of the debtor, but if you do, you record it there. So, and we did not issue out any receipts, or the money was not given directly to the business, but this money was directly deposited into the bank account via EFT. So we record nothing under analysis of receipts. Okay. How much? 480. Where is this money coming from? The debtor. Okay, so it's like bank it's plus, debtor's control is minus, because this debtor is paying what she owes to the business. So debtor's control is going down while the bank is increasing. Okay, let's move on to the next transaction. Let's go back. So we are done with day 14. Let's move on to day 16. Remember, day 16 goes into the CRJ as well. The owner increased his capital to 80,000. Issued receipt number 23. Okay, how do we record that one? So it's going to be the receipt number, R, need a different color pen, R23, day 16. You can write the name of the owner, or you can say cash, whatever the detail might be. So I'm going to write K Nkosi, okay, because I don't have space here. K Nkosi is Kiratile Nkosi. Remember, that's the name of the owner. Okay, analysis of receipt. The receipt was issued out of how much? That's the thing. Remember, the capital that she had deposited before is 20,000. She moved it to 80,000. So how much did she had to pay to increase her capital to 80,000? She had to pay 60,000. Eh? So the answer there is 60,000. How much went into the bank? 60,000. The second account, remember the double entry principle, this money was for capital. So we don't have any capital account where we can record this 60,000 under. Okay, it's not provided. So if an account is not provided, you open it up yourself under sundry accounts, other accounts. So we're going to say capital. How much? 60,000. Okay, perfect. And then we are done with the transaction on day 16. We move on to day 19. Sold goods for cash to El Khasi for 6,000 according to the cash register. So goods were sold. So how do we treat or record goods that were sold on credit? It's going to be, goods that were sold cash, not on credit, cash, guys. Sorry about that. It's going to be CRR. So they did not give us the number, so we'll just record CRR just like this. So it's day 19. Details, cash, sales. Okay. Or you can record the name of the person who bought the goods cash, and that is El Khasi. Okay. So analysis of receipts. Remember, analysis of receipt, guys, this is your till. Okay. So for a person to buy goods, they have to scan the goods, at the till. Okay, and they receive a cash register. Not they receive a cash register roll, but they receive a till slip that comes out from the cash register roll, or that gets printed to the cash register roll. Okay, paper. How much? 600. How much went into the bank? 600. So nothing on debtors control because of money was not received from the debtor, in payment of their account. Okay, but this money was actually for sales. So sales, you always record the selling price. Cost of sales, you always record the cost price. So what is the cost price of these goods that were sold? Let's calculate. So 600 is the selling price, multiplied by 100 divided by 125. Remember, 125 is the markup. So the cost price of the goods is 480 then. Okay, perfect. The next one, so we are done with day 19. The next one, day 28. Remember, in day 28 we have two transactions, and both of them would be recorded under the CRJ. Let's start with the first one. Remember, we don't add up our bank account when we have more than one receipt on the same day. Okay, so for the first transactions, we don't add up, or we don't put or make an entry into the bank account. We only deposit or write in the bank account after the last transaction, and we only take the total of every amount of money that we've received on that particular day. Let me show you. So let's start with the first one. T Konka made an EFT of 1,200 in part payment of her account. Okay, let's record this one. So it's going to be day 28. So it's an EFT, so BS. We have to verify by checking the BS, or the bank statement of the business. This money was received from a debtor, T Konka. So you write the name of the debtor. Analysis of receipt, nothing. The money went straight to the bank. The money was deposited directly into the bank account of the business electronically. So no analysis, no T. Again, but this money, we cannot record it under the bank yet, because at this stage we have not closed down the business or added the money together, or calculated the total amount received for the day. So we are not going to go at the same time and deposit this money into the bank account. So for the first few transactions, you don't write anything under the bank account. But this money, we know that it's from a debtor, and the debtor paid 1,200. There is still another transaction that we have to wait for. Okay, so let's do that. We are done with this one. Received an EFT from K Power for office space let to him for the month. The annual rental amounts to 36,000. Oh, okay, but we only want the amount for July. Okay, we only want the amount for July. So let us do this one. It's also an EFT, so you have to verify with the bank statement. The day is the same, so I'm going to put a tick. I will leave it empty. It's up to you. So this money is from K Power, a tenant. Analysis of receipt, nothing, as this is a direct payment. So the money was directly deposited into the bank account of the business. So, but we know that at the end of the last transaction, we have to take the total amount for the day and deposit it into our bank account. So how much did we actually make for this day 28, or how much did this business make on this particular day? But before we do that, let us record what this transaction was for. So this transaction was for rent. So the tenant paid rent again. So we don't have an account for rent that was received here. So we open the rent income account. Okay, under sundry accounts. And guys, please don't just write rent. Please write the full account name, which is rent income. Okay, how much was the rent income? You cannot write the whole, or take the whole 36,000 and record it under the Sandile account, because we only want the rent for July. So we are going to say 36,000 divided by 12, so that you get how much is the rent per month. Okay, let us calculate it. It's going to be 36,000 divided by 12. It's going to be 3,000. So the rent for July is 3,000 rents. Okay, so how much will the business deposit into their bank account for day 28? Remember, it's this 1.2 plus this 3,000. Okay, so you're going to say 1,200 plus 3,000. That's how much the business made for the day, and this is how much they are going to deposit into the bank account. So it's going to be 4,200 if you add the two, then nothing under analysis. Okay, nothing under here. I'll just write an X there. Okay, let's do the totals. We are done. Now let's do the totals. So it's going to be 480 plus 60,000 plus 600 plus 4,200. How much do you get? 65,280. And then this one, when you add it together, you should get 1,680. This one stays as it is, 600, and then you have 480, and then this one you have 63,000. Okay, so how do we check that this was done correctly? Remember, you have to add your, put a tick here, your sundry, your sales, as well as your debtors control. Okay, so when you add all these three accounts, there can be more in other activities except for cost of sales, because cost of sales is already inside the sales amount, so you don't have to add it, just to check. Okay, so when you add 63,000 plus 1,680 plus 600, it should give you the total amount for the bank, which is 65,280. So this is correct. Okay, that's how you check. And then I think that's it. So in the next video, I want us to look at the accounting equation. Okay, take care, guys. I hope you learned something from this video.